Welcome back to the channel. Today, we are analyzing a massive convergence of global macro shifts and domestic Indian market dynamics. A historic Iran interim peace deal has sent shockwaves through the energy markets, triggering a steep drop in crude oil prices. This supply relief is acting as a rocket booster for Indian equities, pushing the Nifty 50 to surge 4.5% over just 4 sessions, placing the key 25,000 mark well within reach. But it is not a smooth path upward. In Washington, the newly appointed Federal Reserve Chairman Chief Warsh has shocked the global financial architecture in his debut, signaling a hawkish policy overhaul that is shaking up bond yields, putting pressure on emerging market currencies, and casting a long shadow over India's high-growth sectors. Let us begin with the global geopolitical breakthrough that is redrawing the commodity landscape. Donald Trump has officially signed an interim memorandum of understanding with Iran, creating an unexpected peace corridor in the Middle East. As a direct result, the strategic Strait of Hormuz has reopened for unrestricted commercial shipping, and empty LNG and crude tankers are moving once again. Crude oil prices have tumbled instantly. This massive drop in energy costs has prompted the Bank of England to hold interest rates steady, citing an encouraging fall in systemic inflation risk. For global macro traders, this deal is a monumental supply-side shock that could dramatically lower headline inflation expectations across major economies. But while the oil market celebrates, the fixed income space is in absolute turmoil. Federal Reserve Chairman Chief Warsh just made his highly anticipated debut, and he did not play by the traditional script. In a historic shift, Warsh bypassed the standard rate projections, signaling a massive overhaul of the Fed's policy communications. Wall Street analysts are quickly realizing that Warsh is a hawk in dove's clothing. By skipping rate projections, he is reserving the right to keep interest rates higher for longer to combat sticky underlying inflation. This hawkish surprise has rocked the US Treasury market, triggering a massive bond sell-off and pushing yields higher, which has immediately dampened expectations for global interest rate cuts. Now, let us dive into our first major corporate spotlight. Over on Wall Street, the historic Nasdaq listing of Elon Musk's SpaceX has run into its very first speed bump. After an incredibly volatile debut week, which some analysts likened to a high-stakes meme stock rally, investors are trying to decide if the aerospace giant can actually sustain its multi-hundred billion-dollar valuation. Some believe the private-to-public transition will unlock unmatched capital to fund Starship and Starlink, potentially turning SpaceX into the world's most valuable corporation. Others, however, warn that extreme retail enthusiasm and massive execution risks could lead to a painful valuation correction for early public shareholders. Shifting our focus directly to the Indian markets, the plunge in crude oil is the primary fuel behind the spectacular rally on Dalal Street. The Nifty 50 benchmark has jumped 4.5% in just 4 trading sessions, closing in on the historic 24,000 and 25,000 milestones. Because India imports over 80% of its crude oil requirements, cheaper oil dramatically improves the country's current account deficit and takes immense pressure off corporate profit margins. This has brought foreign institutional investors back into Indian equities with renewed vigor, extending the domestic market bull run to a 5th consecutive day. However, the domestic currency market tells a far more complicated story. Despite the massive relief from falling oil prices, the Indian rupee fell 21 paise to hit 94.71 against the US dollar in early trade. Why isn't the rupee surging alongside Indian stocks? Bankers reveal that any potential oil-related gains for the local currency are being capped by the Reserve Bank of India's active foreign exchange book management and heavy corporate hedging for interest payments. Furthermore, the US Fed's hawkish tone under Warsh has pushed global capital back into safe haven dollars, keeping the pressure on emerging market currencies and shutting the door on any quick rally in Indian government bonds. Turning to major Indian corporate news, the highly anticipated National Stock Exchange IPO is generating massive waves on Dalal Street as its valuation eyes the 5 trillion rupee mark. Yet, a fascinating divide is emerging among market participants. Legendary superstar investors like Ramdev Agrawal, Radhakishan Damani, Motilal Oswal, and Dolly Khanna are conspicuously sitting out of this public offering, choosing to keep their capital on the sidelines. On the flip side, institutional giants like State Bank of India and Bank of Baroda are participating as major selling shareholders in the offer for sale, positioning themselves to secure massive, multi-bagger gains on their early investments, while LIC has chosen to hold its stake firm. Our second corporate spotlight takes us into India's IT sector, which is facing severe global headwinds. Following Kevin Warsh's hawkish tone at the Fed, major IT companies including Infosys, Tata Consultancy Services, and Wipro saw their stock prices fall by up to 3%. When US interest rates are expected to stay elevated, American corporate clients typically tighten their discretionary IT spending budgets. This environment presents a major challenge for companies like Coforge. Although Coforge has outlined an incredibly bold growth plan for fiscal year 2030, analysts warn that achieving these targets will depend heavily on global macroeconomic factors turning favorable for tech spending. In contrast to the tech sector's struggles, beauty and fashion e-retailer Nykaa has emerged as a standout winner. Nykaa shares surged 8% to touch a fresh 52-week high following the unveiling of its ambitious fiscal year 2030 corporate roadmap. The company has set a highly aggressive target of achieving up to a 3 times revenue increase over the next several years. This bold expansion strategy has successfully restored investor confidence, triggering a wave of buying as institutional traders bet on Nykaa's ability to maintain its dominant market share in the premium beauty and personal care landscape. Meanwhile, the complex restructuring of the metal and power giant Vedant has yielded highly contrasting results for its newly listed entities. Vedant Iron and Steel shares hit their 5% upper circuit for the 4th consecutive day, marking an impressive 20% surge since listing, driven by strong domestic infrastructure demand and extremely bullish broker initiations from Citi and Kotak. However, it is a very different story for Vedant Power. Its shares dropped over 3%, slipping below their initial listing price, as investors reallocate their capital toward the group's higher-margin industrial metal businesses. We are also tracking explosive moves in other high-profile mid-cap stocks. Yes Bank shares have surged 16% in just 5 trading sessions, hitting a fresh 52-week high amid high volumes, with technical analysts suggesting that a major structural breakout is underway. At the same time, telecom equipment manufacturer HFCL jumped 5% after securing a massive 2666 crore rupee order from Rail Vikas Nigam Limited. This lucrative contract adds to HFCL's rapidly expanding order book, fueling a spectacular 200% rally over the last 6 months as India accelerates its national 5G and fiber network rollouts. Looking slightly further ahead, all eyes on Dalal Street are turning toward the upcoming Reliance Industries annual general meeting. Retail and institutional investors are anticipating several massive announcements from Chairman Mukesh Ambani. The market is highly focused on a potential timeline for the blockbuster Zio IPO, which could be one of the largest public listings in Indian corporate history. Additionally, the market is expecting major updates on Reliance's domestic AI strategy, its deep tech integration, and its multi-billion-dollar new energy roadmap, which could redefine the conglomerate's growth trajectory for the next decade. Finally, we must look at the massive liquidation event taking place in the precious metals market. Domestically, MCX gold rates have slipped below 1.53 lakh rupees per 10 grams, while silver prices experienced a dramatic crash, plummeting by 6,000 rupees per kilogram. As Kevin Warsh's hawkish statements drive US Treasury yields higher and the US-Iran peace deal reduces systemic geopolitical risk, investors are rapidly rotating out of safe haven assets. With inflation fears cooling and global yields rising, gold and silver are losing their near-term appeal, leading to a major unwinding of speculative long positions. As we synthesize these global and domestic developments, the overarching narrative is clear. The global macro landscape is undergoing a massive transformation, driven by a hawkish Federal Reserve transition and a historic drop in energy prices. For Indian investors, this creates a unique dual dynamic. While the drop in crude oil prices provides strong support for domestic indices like the Nifty and the Sensex, the hawkish global interest rate outlook requires a highly selective stock-picking approach. Investors should focus on high-quality domestic cyclicals, strong infrastructure plays, and consumer companies with solid growth visibility, while maintaining caution in sectors that are heavily reliant on global discretionary spending. Stay tuned, keep analyzing, and we will see you in the next video.